Uh, so happy you're all joining us today. I'm Carolyn Kuski. I'm the Executive Director of Insurance for Good, and I'm really delighted to moderate our second Research to Practice webinar. This is a new series for us to try to help connect leading research to policy and practice. And I am so happy that our guest today is Lars Powell, who I think really exemplifies this work of moving insights from research into practice. Before introducing him, just a few housekeeping notes at the top. We're recording the webinar today. It will be uploaded to our YouTube channel for folks who weren't able to join and want to watch later. We're aiming to have about half the time to answer your questions. So as you're going, if you have questions you'd like Lars to answer, please just put them in the Q&A box and we'll get to as many as we can at the end. We'll be sharing some of his research and work in the chat for those of you who want to go deeper after hearing the presentation. So I think that's all the notes for the session today. So with that, I am delighted to introduce Dr. Lars Powell. He's the Executive Director of the Center for Insurance Information and Research at the University of Alabama. The center identifies and solves risk and insurance problems with research, education, and outreach. Dr. Powell has previously worked in both academic and industry roles. He currently serves as the president of the American Risk and Insurance Association. He's on several nonprofit boards, supporting insurance and resilience research. He earned an undergraduate degree from the University of South Carolina and a PhD in risk management and insurance from the University of Georgia. I'll say he's a national expert on these topics of insurance, hazard mitigation, disaster policy, and as I already mentioned, been a real leader in helping bring those into policy and regulation. So we asked him today to share some of his work about this intersection of insurance and risk reduction. So thanks for joining us, and over to you.
Well, thanks, Carolyn. I've been looking forward to this since you invited me. This is a great project that you have going on, and I'm excited to contribute to it in any small way that I can. Should I go ahead and share my slides? Is it
Yeah, go
time
ahead
for
and
that?
share your
Yeah,
slide.
okay.
Yeah.
Make sure I do this right. There. Yeah.
Yeah, that's
So
looking good to me.
awesome. Yeah. So I'm Lars Powell with Insurance for Bad. If Carolyn's Insurance for Good, at least it'd be more fun that way. But I tend to agree with most of what she says. So I'm going to share a few things. And the theme of this is, well, as any academic loves, I get to talk about myself a little bit, and I'm looking at the large turnout and a lot of familiar names on the list. So I'm sure some people are already rolling their eyes, but the focus, as the name of the talk suggests, is translating research into practice and how we get these things to make a difference, which isn't always the point of research, at least for the people who are doing it. And I've got a slide on, let's see if there we go, just a little collage of some of my papers that have been published or released based on resilience and some of the things that we've measured. And I think eventually these will be put online in case anyone wants to read them. So far, not very many people have, and so you're welcome to do that. You can't be first, but you can be next. So some of the themes of my research, and there's no big surprises here, have been around the IBHS, the Insurance Institute for Business and Home Safety Fortified System. And I've partnered with them on several studies. I'm not going to talk about all of them here, but some of the things we found are that the fortified system works when a hurricane hits, and that the fortified designation adds value to a home. And something that's not going to surprise anybody that does research or any economist writ large is that people don't always behave rationally with respect to mitigation. The problems around mitigation and adoption are formidable. First and foremost is the kitchen, the kitchen countertops, the kitchen finishes. Also, any sort of bathroom remodel is generally prioritized over any other expense you can have in a home. And it's not anyone's fault, right? We don't always think about the insurance on the house, or we almost never think about the insurance on the house when we're choosing the house that we want, or the probability that it's going to blow over, unless maybe you've had that happen before. So the big thing that we have to compete with is the kitchen countertop. The other thing is, and something that we've found some empirical evidence on is do people value risk? If we look at the ways they behave, people actually in each one of these pictures, people have paid good money to go and do these things that look like you're not going to catch me there, but for people this is fun. And it's things that are not exactly safe. And so we wonder, why don't people spend more on having a house that's got some loss mitigation features? And the answer is maybe they don't value risk. Indeed, we don't find any value from the risk mitigation of Fortified. What we find is the value from the reduction in insurance premiums. And it lets you afford a more expensive house because your payments are going to be lower. To nutshell, at the expense of being Captain Obvious, the problem that we face in insurance, it's one that's been brewing for a while, but we've started to transition from a potential problem to a problem, and that's we start out with some uncertainty, which increases the cost of capital. We don't know how much losses are going to be because they can be positively correlated or just uncertain. And that increases the cost of insurance until we come to very much a insurance 101 situation. We talk about there's requirements of an insurable risk, and one of them is that people can afford it. So when people run out of money and can't buy insurance anymore, that's when it goes from being the insured's problem. And here we've got just a Captain Obvious chart of these increases in the cost, which I say are either a climate or a demographic effect, because we don't have climate change in Alabama. I don't know how those of you in places with climate change even deal with that, but for a host of reasons, you can have increasing insurance premiums when people move into harm's way or changes in weather patterns. So if we think about it in real terms, and we've got so a lot of people's income isn't exactly increasing in real terms over time, and the baseline of expected losses would stay the same. But as these expected losses and the uncertainty around them grows, it's the consumer's problem until we get to, in this case, it's 2038, and then it becomes the insurance company's problem too, because nobody can afford to buy insurance anymore. And I feel like in some states, I don't feel like, I look at the numbers and I see that in some states that's we're getting there. We're coming, if we're not there already, we're getting darn close. And so everybody starts feeling the pain, and now it's time to do something about it. So the way we think about this, or way we thought about it initially, and there's a number of really smart people who have been thinking about this longer than I have, but it starts with an information problem, maybe the original sin of contractors building the houses that people want to live in. I say that not so much tongue in cheek. That's what they're doing. When somebody goes to buy a house, they want to have those countertops and a faux finish or whatever else, however they want the floors done. But then after a hurricane comes through a neighborhood, there's no accountability. That never comes back on the contractor, because in their defense, they're selling you the house, or they're building the house that you've told them you want to buy. If there was some rule where after a storm, your contractor had to walk through the neighborhood and ask how those countertops are doing, now that you don't have a roof on your house anymore, and you could have, for the cost of like 3 square feet of that countertop, you could have put hurricane clips and taped your roof deck seams and all these other things that need to be done to keep the roof on your house. And that conversation is ever being had. And this is what led to our first research project on resilience, which was the effect of the fortified system on home sale price. And there was a famous paper on IPO costs when I was in grad school that they called the 7% solution. That's what people were willing to pay, or people were willing to pay their broker to make an IPO and an initial public offering happen. Well, it turns out that we've run these numbers over and over again on the difference in sale price between a fortified home and a conventional construction home, and other people have too. And what we come back to is about 7%, that you sell this, that the fortified home sells for about 7% more than another home. And the way that we figured that out, or the way that we estimated that was, and that this was back, the first time we did it was in 2016. And we had, I think, 250 maybe fortified homes that had sold, because you don't buy one of these things to turn around and sell it. And this was still a really new idea, but we had 200 and something fortified homes that had sold, and those are the red dots, and the black dots are the conventional homes. And we estimate the interaction of those with the distance from the coast, which is represented by these blue lines. And we're just looking. This is Mobile County in Alabama. It's one of our two coastal counties, and so we've got kind of a bay coast, a Mobile Bay, and then a Gulf Coast. And we look at the distance you are from one of those points and interact that with the sale price. And what we come up with is at the median distance from the coast, the effect, no matter how you look at it, and we did it in a number of different methodologies, which nobody cares about and probably shouldn't. But anyway, we try to do it. We found it was about 7%. And we've updated that with newer data, and guess what? It's still about 7%. And not just one of the things that we were a little bit concerned with was, look at how high this is at the closest home to the coast. Could that really be true? And this is one of the times where we get a lot of good information from people who are on the ground. And in this case, my buddy Leonard Kaiser is a realtor in that area, and he says, no, that's low. 15% is low. If he's got a beachfront house that's fortified, it generally goes for 20 to 25% more than a comparable conventional construction house. And so it's good to have that validation. The next thing we did, and this was so much fun, because it was the first time I'd been in a position where I don't get paid 10 cents to publish a paper in an academic journal. What they want is for us to find solutions and put them out in practice. So we took the time, we went to the Alabama Association of Home Builders and showed them what we had found. And they liked this a lot. And they were about to do, every year they do a series of continuing education programs for contractors and for real estate appraisers. So I was invited to go to 5 different places around the state, 5 different cities where they were holding these continuing education programs, and present the results of this study to them. Usually more than 100 people in the room, and maybe 2/3 of them are appraisers. And so what we ask is, we show them, hey, this affects the sale price. Please use this as a factor in your appraisals. And how can we make this more useful to you? And at the time, the paper was a little 6-page write-up that had this big blue cover on it. And still to this day, I'm told by people at the Federal Home Loan Bank that they'll get an appraisal on a home in Alabama that has this stapled to it and 7% added to the estimated sale price. And that's not exactly how we wanted it to be used, but it might be a little better actually than what we had expected. So what we're getting, we know that our research is being used. We wish they were getting the 20 to 25% right on the coast. I don't know if they are or not, but it's very, very flattering. Oh, you're the blue report guy. Now I know where all that comes from. Another thing we did along the way was we badgered the realtors until they agreed to add a fortified category on the multiple listing service for South Alabama. And this is a screenshot I took, and wow, it's probably been 7 or 10 years. Well, not quite that long, probably 5 or 6 years, but you can see that it's just a search on Zillow or one of those for fortified, and there were 764 homes for sale at that point in time that had an IBHS fortified designation. Oh, so the next thing we did, and this is something I've been on the road talking about for a little over a year now, is a study of Hurricane Sally. And Hurricane Sally came ashore on September 16th of 2020 as a strong Category 2 hurricane. And what was remarkable about Hurricane Sally was it was the first hurricane to hit a critical mass of fortified houses. So let's take a second and say, what is a fortified house? This is something that was developed with research from the IBHS. And what does that mean? What goes into it? Well, I can tell you I've done this myself. All the Habitat for Humanity houses are built this way in Alabama, and we volunteered on a few of those, and it's not even that hard to do. You put some tape on the seams of the roof deck so that if the shingles come off, water still can't get in. And you put some glue, they call it construction mastic or something like that, underneath the drip edge. That's what this gentleman's doing, is gluing down the sides or the rim around the outside of the roof so wind can't get under there. And you nail everything down with a ring shank nail instead of a smooth shank nail. So the conclusion there is that it's not rocket surgery. It's not hard to do. It's for the fortified gold, our volume builders tell us that it costs them less than 1% of the value of the home, or the cost of building the home additional to build to the fortified gold standard from the ground up. And we wonder why people aren't doing it. Well, because they don't know. So one of the things that we still hear, but less so with this evidence, is, well, that's just a scam by the insurance industry to make contractors work harder, and then they get paid to evaluate it or whatever. I don't think there's any basis in that, but we took 42,000 policies and their associated losses and policy terms that were south of I-10, and this is just plotting those across wind speeds without really doing anything else except controlling for the wind speed and the construction. So the blue line is the conventional houses, this reddish brown line is the fortified roof, and the yellow line is fortified gold. And you can look at that and tell that fortified works, that it worked really well in Hurricane Sally, and that there's a lot of separation there. It's a blinding flash of obviousness. One thing that troubled me was that there is some noise in this, that more noise than you would expect in the laboratory. And of course, we're not in the laboratory; we're in the real world. But what we learned from talking with some of the insurance companies that helped us put on the data call was that the only losses they really saw for fortified gold houses was when a tree fell on them. And it turns out that the trees aren't uniformly distributed. You don't find a lot of big trees on the beach. They're more inland. And so one of the things we did, the only thing you can really do about trees is cut them down before they land on your house, which I shared that with a group of arborists a few weeks ago, and it wasn't their favorite thing, but we had a long and productive talk about it. So when we take out those tree claims, what we get is a picture that looks identical to what the engineers at IBHS and their big, beautiful laboratory would predict, or the people at the catastrophe modeling companies would predict, that once you get over this 90 knots, or maybe it's 95 or 100 knots, then you start seeing some structural damage in houses that don't have the full the full envelope of wind protection, which is the difference between the fortified roof and fortified gold. And that gives us a lot of confidence in what we already knew. And it's good to have that because we can reference it. And if we were to impose the results from our study, we found that the fortified reduced frequency of losses by about 75% and severity by about 20%. And so if we had started doing this in, say, 1960 or 1980 instead of 2010 or 2015, and all of the houses there were fortified instead of right now it's about 60 something thousand out of 240,000, so about a quarter of the houses are fortified. And if they were all fortified gold, then it would have the deductibles that policyholders had to pay would have been 65% less, and the claims that insurance companies had to pay would have been 75% less. So that makes one of the things that struck me was one of our results showed that the insurers underwriting fortified houses could have had a loss ratio of 43 if just underwriting with a hurricane during the year. So a lot of companies would settle out of court at the beginning of the year without a hurricane for a 43 loss ratio. And that's what they were getting with a strong category 2, almost category 3 hurricane on these fortified houses. A few other little things that we did in our market. We required, I say we, I'm not talking about me, this is our regulator and our legislator have done great work here in Alabama. We require insurance companies to offer a fortified endorsement. And they're not required to, but our wind pool makes sure that every house has that endorsement on it. And so after Hurricane Sally, we gained about 5,000 or 6,000 fortified roofs because every one that was damaged and had to be replaced was replaced to the fortified roof standard. And this isn't something we require insurance companies to offer it, but they can price it at where they think it needs to be priced. It's not regulated any differently. And then we've got our Strengthening Alabama Homes program, which I believe there's 30 states currently either have passed or in the process of running legislation that does the same thing to make a grant program that helps build up the supply of contractors who know how to do the fortified program. And what we find is that after a contractor has bid on one of these, now we've done 10,000 retrofit grants at $10,000 a pop. So right about $100 million, a little over, to do 10,000 houses over the last, I think, 11 years. And once a contractor bids on one of these houses, they tend to turn around and sell the same service outside of the grant program. Hey, I'm re-roofing your house. It'd be a waste. It only costs about 4 or 5% more. It'd be a waste not to do fortified right now when you're having a new roof put on already. And that's a big thing that's helped practice. This is an old chart of our fortified designations compared to the rest of the country. I think now we're up to 62,000, 63,000, but the rest of the country has started making a lot more. I think yesterday was the 100,000th fortified home in the country was celebrated. So instead of having 80% of all of the designations, we're down to 60 something percent of all the designations. And I think that's fantastic. Louisiana, North Carolina, Mississippi, a lot of states have been investing in fortified. So what I'll leave you with are just some thoughts on what insurance can do that is good. How can insurers improve resilience? Provide coverage that rebuilds stronger. That fortified endorsement costs them nothing. And we didn't have a lot of pushback from insurance companies in Alabama when we required it. Not all of them would have done it voluntarily, but it wasn't, once it was done, it's not something that we have to relitigate every year. Incentivize performance construction capacity. What I mean by that is most insurance companies have a list of contractors they'll recommend to their policyholders when there's a claim. And one thing they could do that's really easy, I'll admit it's illegal in some states, but if you tell those contractors that 2 years from now, you will no longer be on our list if you are not certified to build fortified houses or fortified roofs. Then I'll bet that would encourage them to get certified, and that would increase the supply. Financing retrofits is something that's just now coming to fruition. We're seeing in several efforts that involve all of the insurance companies that advertise during football on Saturday and Sunday are coming together to make a facility to help finance these retrofits that people don't get grants to do, and I think that's fantastic. And the last thing is to advertise about these things. If you're like me and you watch these advertisements that are always on television, and except for Limu Emu, I really like Limu Emu and Doug, but the rest of them I can really do without. And what happened to the advertisements that showed, like, it was the Hartford with this big elk running through the forest and looking strong and honorable? We could just take a fraction of Flow and Mayhem and some of the other stuff and maybe put in, what about a stronger home that doesn't blow over in the wind, so that you don't have to interact with us after the next hurricane. So those are my prepared remarks, and this is a QR code if you want to download the Hurricane Sally report. And otherwise, I'm looking forward to answering some questions and interacting any way that you're willing.
Great. Thank you, Lars. And you kept right on time without anything. That's wonderful. You can go ahead and take down your slides if you want, and we can just, yeah, chat during Q&A. Okay, thank you for that. I'm going to start with a question that Alex put into the Q&A, and I think it is from your Hurricane Sally study and also gets to something that might be worth you teasing out a little bit. So he says that at a recent conference, Roy Wright, who runs IBHS, for those of you who don't know, said that independently verified fortified roofs in Alabama perform 50% better during Sally, that's a really large statistic. I think that might be from your study. But could you also talk about the difference between actually getting the certification that you're indeed fortified and what difference that makes?
Yeah, so that was in our study, and it's something that I've been meaning to revisit and get a sharper pencil on for 6 months. And if it weren't for all the other people I had promised I would do things for before then, I would have done it already. I was actually playing with it on the airplane last night, and I think we'll find that it differs across some jurisdictions. But here's what we're finding. The building code, first of all, for fortified gold, we don't find any difference. And that's the ones that are built from the ground up. And the process for, let me back up a minute. There are jurisdictions in Alabama where the building code, there's a supplemental building code that calls for you to build to exactly the fortified standard, but without the IBHS fortified evaluator looking at the house during construction. And a lot of that happens with the builder takes pictures with their phone and with something so you can gauge the distance between the nailing patterns and scanning the products that you bought, like the types of nails and types of windows, and that's uploaded to IBHS's server. But there are still visits where someone comes out and looks to see what you've done, and they give you a detailed prescription for how to get that house from where it is now to fortified, whichever designation. And so you don't have to do that to meet code, but you do have to do that to have a fortified designation. And we have a few thousand houses in Alabama that are built to a code but do not have those designations. So they weren't evaluated by the IBHS evaluators. And what we find is, yes, it's the difference about it. It almost splits the difference between the conventional house and the fortified roof, and it's kind of right here in between. And I think some of that has to do with the building inspector strategy, where if you meet them at their truck with a biscuit and a cup of coffee, that they're very unlikely to get out of their truck and look at anything you've done. I say that kind of tongue in cheek, but I know that that exact thing has happened before and will probably happen again. That's a lot harder to do with someone who's being paid by someone and will be held responsible if that house is not fortified after the next storm. And yes, so there's a big difference in performance. I specifically looked at one of our top uh, code inspection areas, which is in Fairhope, Alabama. I was at a thing actually in Mississippi a few weeks ago. I ran into the person in charge of building code inspections in Fairhope, and he said, "I'll bet that ours weren't any different." And he was wrong. Their Theirs were actually just a tiny bit better. It's not statistically significant, but it's just that there was no measurable difference in that jurisdiction. But that's just me running a few averages last night, and I probably shouldn't talk too much about it to all these people. But I just wanted to put a little grain of salt along with that, in that building codes are still really, really good. We need to have building codes,
Yeah.
and it's great to have building codes. Fortified's probably a little bit better based on the system they have for the evaluation to make sure it gets done correctly.
Yeah. And okay, so I have two follow-ups on this. The first one just on this certification evaluation and kind of extrapolating to the insurance discounts and insurance reflections. Because one question I had for you was like, what insurers need to better reflect loss reduction in premiums and underwriting? And it seems like, especially from your study, that these independent evaluations to really certify that it has been done is maybe one of those things, because then they can trust that they're actually going to see the avoided losses. Is that, would you add anything to that? Do you think that's
Yes. Anecdotally, I can say that there were a handful of houses that were this, what we call code fortified. Roy probably doesn't like it when we say it that way, but the code should be fortified, but it's not inspected. And one of them in particular, it shouldn't have had any damage, but the whole thing blew up. It needed a whole new roof, and it was an out-of-state contractor and an out-of-state owner who was building it to rent it out on the coastal Gulf shores. And who knows exactly what happened, but I'll bet you that house. I actually drilled down and pulled the building plans and everything from the permit office, and everything on there said that it should have been built and fortified, but the roof came off.
so we need good
You
codes
tell
and
me, yeah.
enforcement of those codes.
Yes, and that was a big part of what Fortified brought to the table. What IBHS brought to the table was um, not just, hey, we're going to build it better. We'll prove that we built it better, because there's just a lot of how do I want to say this? There's room for improvement in enforcing building codes, and again, it's better to have them than not have them. And in a perfect world, everything would happen just the way we want it to, but empirically, we see that that's not true.
Yeah. Okay, another research question follow-up. A cost benefit analysis would take these great benefit stats you found in terms of avoided losses and compare them to the cost of fortified. So one question coming in is, has that been done, that cost benefit analysis? And if so, can you share what you found or others have found?
Um, so well, just from some very basic thoughts, if your house is going to sell for 7% more and it costs 1% to do it, then I think your cost benefit shows up right there. Most of that is about discounting those insurance savings over the life of a mortgage, is the way that we talk about it. And that's almost exactly what you find in the fortified sale premium, is that you get back that savings gets capitalized into the price of the house. So when you sell your house, yes, and when there's a storm and you look at the premium versus the losses, my recollection, we worked on this during the Sally study. I don't think we left it in the end because it was controversial, but everybody wins. Some people might win a little bit more than others. And but yes, there was enough consumer surplus in what you're spending on fortified that even after the premium discounts, the insurers still do fine. And with the premium discounts and the decrease in losses they have, that yeah, was the hurdle to get over to get back the money you might have spent to re-roof your house is very low.
Okay, we have several questions digging in more in Alabama. So to kind of actually set the stage for them, and Alabama is often held up as a great example, as you know, for having embraced this hurricane loss reduction really well. So could you actually, can we just go over quickly all the things that Alabama did? So you mentioned code. So building codes were upgraded, right? You mentioned a
At the
grant
coast, yes.
program. So there was
Yes.
some grant funding for fortified. You mentioned an endorsement, which would mean there's dollars to put on the fortified roof at the time of a loss. And did you talk about premium discounts? Are there premium discounts for
There
fortified?
are premium discounts. We have
Okay.
benchmark premium discounts. We're just finishing up a study that re-estimates them using the latest models and and information, and that they don't change much. I think the next time they're updated, they'll be a little bit different, but they've only been updated once in 10 years.
Well,
But
that
yeah,
was the
that's a big
question.
thing is,
So let me
yeah,
dig in for you. The question said, curious if the benchmark discounts in Alabama were set before the empirical evidence that you just talked about existed, and do your findings suggest those discounts need to be changed? So, yeah.
I think the best way to characterize that is if you look at Hurricane Sally, it was a very average hurricane, and but it's only one hurricane. And from our results, I wouldn't change, I wouldn't set rates based on results from one hurricane. That's not just because I want to do this study again. I don't like wish or pray for more storms, but like somebody that reads the weather, my job gets a lot more exciting when there is one. So I want to do this study over and over again in a lot of different places. But it'd be nice if we never had to. But if we do, then yeah, we need more information. I think using the catastrophe models and example houses and putting them in different places, doing the same things that the insurance companies do when they set prices is more reasonable than, oh, look, we had one hurricane. Here's how it came out. Yeah, there could have, it's just like Hurricane Andrew in 1992 could have been a mile to the west and a completely different story. It could have been three times as much damage. And are we going to change all of our rates based on that? Are we going to change all? I think it's having one storm is just not enough to. I think that the Sally results bolster people's confidence in the models. We found that the models had been performing well based on our read of the data, and that was one of the things that we really wanted to make sure was circled and starred in the report.
That makes sense. Um, okay, so Alabama has all these programs operating. And so a question has come in about what factors you attribute Alabama's large share of the fortified designation. So obviously it's these programs, but what the questioner is asking is more on, was it workforce development? Was it the supply chain? Was it awareness? Was it actually directly these policy things? I'm sure the answer is probably like all of it interacted together, but kind of what do you
Yeah.
tease
So
out as important?
there's
Yeah.
a lot going on. I think that the best way I can explain it is Alabama was the first state to realize we didn't have a choice. Um, we're not California or Florida that can tell insurance companies you've got to lose money on homeowners if you want to sell auto insurance here, which is turned out not to be a winning strategy in any other state anymore. But we couldn't even play that game for a week and a half, much less 40 years of Prop 103. We know that if we say you've got to lose money here, and they'll say okay, then we won't be here. A state of 5 million people with 38 miles of coastline. So we knew that we needed to fix the underlying problem and not just try to politic and give it put lipstick on the pig, if you will, by changing our rate regulation habits or whatever. So we were forced. A lot of people didn't want to do this at all. We were forced to give it a try, and we had several strong leaders who made great choices. We made some mistakes along the way. We started out Strengthen Alabama Homes trying to give away FEMA money, and I think we got several $1 million from them. And 3 years later, we gave it all back and returned all the applications because we hadn't been able to get a single one approved with all the red tape, and there were changes in leadership at FEMA. it was just a debacle. So instead of doing that, we increased the agent licensing fee that insurance companies pay. We doubled it from I think $30 to $60, and the legislature let us keep half of that to spend on Fortified. That's also the funding that funds my center. So I'm
And
happy they
that's
did
year
it.
on year now. That's like a sustained funding for this type of mitigation. I think that's a super transferable lesson because you have to have that consistent funding. Okay, sorry to interrupt you, but I think
Oh
that's
no, but that
yeah,
was where we got the money for Strengthening Alabama Homes, which created the workforce. But we also had people like Julie Shayu Woodard at Smart Home America, who's on the ground. Um, I won't say that she threatens people to make them to make them do Fortified, but maybe she does. No, she's a force of nature who is out there convincing people to, that they still host lunch and learn every other week at an employer or anywhere, anybody that will listen to them, they'll bring them lunch and tell them about Fortified. And if it's contractors, I'll show them how to build Fortified. If it's a large employer, they'll say this is why you're employees should live in fortified houses and why you should help them pay for it. So there was a huge effort. We ran radio and internet and even some television commercials about the three little pigs, and you want to be that third pig, that lived in the stronger house and the wolf couldn't blow it over. That
it's
one
the
was a lot of
fortified
fun.
house now. We got to
Yes.
change the story. Yeah.
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 Yeah. So yeah, there were a lot of, and of course our regulators, uh, Jim Ridling and Mark Fowler have been huge leaders in this, and they continue to be at the NAIC. So yeah, we've got other states that are asking, "Hey, what did you guys do?" And so we tell them, or my non cousin Brian Powell goes around and tells them. That seems to be his job now, and um, yeah, 30 something states now have a similar program, but some of them are doing it a lot smarter than we did, or they've got little changes they've made. Louisiana has a lottery system like we do for giving out the grants, but they weight the number of grants they're going to give based on the risk in each zip code. So the highest risk places are the most likely to receive the grants, which I thought was brilliant. Because what we do, we've replaced a lot of roofs north of I-10, which we're just happy to have the roofs replaced and to fortified. But if you want to get the biggest bang for your buck, you probably want to prioritize the most risky areas.
For sure. Okay, we're going to pivot a little bit. So a question has come in about the fact that presumably many homes in Alabama saw flooding as well as wind damage from Sally and other storms. So the question is, has there been attempts to bring flood resilience into the conversation about fortified as well? Or is this more difficult to regulate because it's really federal flood insurance and a more federal kind of footprint than for state wind insurance?
We've been very open. Again, I'll say that when I say we, I'm mostly talking about Commissioner Fowler and his team, which I consider myself an indirect part of, but trying to encourage private flood insurance to come to the state. But yeah, from IBHS's perspective, they're fully funded by private insurance companies, and it's hard for them to justify a focus on flood. Now, the building code addresses flood, and once a house has been flooded, you build it back and it's up at the base flood elevation. And also, one of the things that not everyone knows about the landscape of Alabama, yeah, the Gulf Coast is right at sea level, but if you come to Mobile Bay, there's a lot of those houses are higher up, and the probability of flooding from a hurricane is very low. I'm not saying it doesn't happen, but a large percentage of those houses are not as exposed to flood as you would think just looking at a map. So no, the answer is no. We haven't done anything specifically about flood, except we'd love to see a lot more options for people to buy flood insurance. And NFIP has its own set of issues that maybe create incentives to build where people shouldn't build. But at this point, the horse is out of the barn, and the houses are where they are. So there's not a great, at least to me, there's not an obvious solution. You probably know if there is one, you probably know what it is, and we can talk about it later.
Yeah, that sounds good. No, I think it's a hard problem. Okay, next question. Uh, this is maybe from someone in Colorado who's commenting that in Colorado, insurance premiums, and actually I saw a recent news article on this that maybe the questioner also saw, the insurance premiums have been driven actually less by fire and more by hail and wind. And so the question is, those are often talked about together, hail and wind. Do you know if fortified also protects against hail? And maybe it's also worth saying at this point that fortified is really thought of as like a hurricane standard because of strong winds, but it also works inland for any kind of severe convective storm wind risk, right? So
Right.
do you know anything about
Yes.
hail?
So that there's a separate category of fortified high wind and hail that is used. So it's growing in popularity in Oklahoma, and also we do a lot of that. That's what we do in outside of our two coastal counties. So we just opened up the Strengthen Alabama Homes Grant Program to Tuscaloosa and Birmingham County, or Tuscaloosa and Jefferson County, which is where Birmingham is. That have had some huge tornado losses and a lot of hail loss. So yes, there's a specific uh, designation that's for hail, and uh, it still struggles with the fact that people use asphalt shingles. It's not a good reason to use asphalt shingles, except that's what we've always done. I think the United States and Australia are the only two countries that have ever thought to use asphalt shingles, and uh, it's probably not something we'll finish doing in my lifetime, but my house has asphalt shingles on it. So do most of my neighbors, but I think we could do a lot better job of avoiding that if we used some other material, some sort of tile or um, metal or even something brand new.
Yeah, it seems so much of this is just about making smarter building decisions, isn't it?
Go
Um,
figure.
yeah. Okay, a question on whether more states are mandating wind premium discounts like Alabama did. So we talked about that earlier and about whether those amounts are set right. Do you know if anyone else has been copying you guys?
Louisiana just posted their benchmark rates. And importantly, the benchmark rate says this is what you need to charge, or this is the discount you need to give, unless you can show actuarial analysis that your book of business has different exposure than, because we've just gone through this process of trying to redo the rate discounts, and it's really hard to kind of thread a needle between something that's simple enough for the public to understand so that they want the discount and something that applies to all the insurers. What I know is that every insurer's had the option to file their own discounts based on their own book of business, and that zero have. And it turns out some of the companies, some of the largest companies in our state, will offer discounts a little bit larger than the fortified discounts based on their own analysis. So yes, it's the benchmark discounts were very important for us. They're very unpopular with for obvious reasons with the industry, but we had a very strong regulator who had built up trust with the industry and said, I'm not going to make you lose money.
That's good.
And there were some negotiations, and it turns out I actually never knew how they set those the original premium discounts for fortified. And somebody at Aon ran the analysis. Nobody, I've asked them, nobody knows who. But when we went back and did it kind of from the ground up, from scratch, it turned out to be about the same. The only difference is the way the models have changed over time and the way building codes have changed over time.
I'm going to interject a question that's been like in the back of my mind for a while, and I want your take on it. So you noted in the fortified endorsements. So I kind of really like the idea of these endorsements because I feel like once a home's damaged, that's like the best time to do something different. It's much more cost effective then. You have to be working on the house anyway. And so we should never be putting back homes in these risky areas without a fortified roof, in my personal little
Yes.
opinion. But you mentioned this that so the endorsement is free if you're in the wind pool in Alabama, I think, as well as maybe Mississippi and North Carolina. But the private market's charging you for it. Do you think that the economics, like it seems so inexpensive? Could the private industry just make this a part of their standard policy for free so people just had it? What's
Well,
your
I wish they'd just give me my whole policy for free.
Okay, yeah, fair
Why do I
enough.
have to pay any
Yeah,
premium at
fair
all?
enough.
I think the having the discussion of I'm not one that'll say that the industry always does the right thing or that, God forbid an insurance company is perfect, but I think asking them to, but the problem is there's no mechanism to keep a policyholder with you after you buy them a new roof. And what we find is that in the Strength Alabama Homes program, we actually have data on every insurance policy before and after the roof is built, and that they get out of the wind pool, they go from a non-admitted carrier to an admitted carrier, and if they don't make any changes in their coverage, they get about a 30% discount, which is a lot larger than you would expect from just going from conventional to fortified roof designation. That's a very large discount. That's larger than just what's prescribed. So they're shopping and they're finding better coverage or a better price, or in many cases they buy coverage that's got a lower deductible or covers more perils, going from the HO2 to the special form, something like that, where they've got a lot better coverage for their home.
And do you think there's more firms like competing over those good risks? Like once you're,
Yes,
yeah.
yes. So
Um,
we've something like 80, 75 companies writing homeowners in Alabama at the coast. And not all of them are actively writing, but they had that's how many responded to the data call from 2020. And we've had more come in and write, especially the fortified homes. Well,
yeah.
I'm not going to name any names, but there might be two uh, companies everybody's heard of that still don't write the fortified homes at the Alabama coast, but there's only two.
Well, there's
That's
only two,
amazing.
which is good. Yeah, that's really good.
Yeah.
Okay, had a question come. Oh, we're getting close on time, but a couple more. We had a question come in about whether you can expand programs to have insurance companies support community-based risk reduction and resilience measures beyond just household measures. So have you thought about that? I mean, the hurricane, it seems like most of how you
Yeah.
address it is home by home, but flood and fire might be a little different. So yeah.
Yeah. So flood, yeah, asking the private insurance market to address flood is probably a non-starter unless you're asking their foundation. That's not a profit maximizing strategy for them. But for fire, we'll see. The fire mitigation is hard, and there's not a lot of great data on it. And the problem with fire mitigation is it has to be monitored, and you have to have more than one person. You got to have everybody rowing in the same direction, the whole community. And the problem is there's always that one guy, in every community there's somebody that just doesn't care, they can't be bothered, and that can ruin the whole thing, the weakest link in the chain. So um, that's where the science needs to go, is how do we make sure that not only are people mitigating their houses for fire, but they're maintaining that. They're not having a truckload of firewood dropped off on their back porch because that's the easiest place to go out and get it in the winter. After they've done, what is it, the net zero thing, so they don't have anything that can burn within 5 feet of
Zone zero.
their
Yeah.
home, and then you drop off a bunch of firewood next to the back door, and that's gone. So you've got to be able to monitor these things. And how does the insurance company? Uh, I want to say that the strategies that the insurance companies have in marketing and underwriting and such, it would be a hard thing to do, in my opinion. Now, I also haven't asked a lot of insurance companies what their plans are for community mitigation around fire. It might be that they figure out a great way to do it, but if they were to say, no, we're not into that, I would think it'd be because they don't know that their policyholders are still going to be their policyholders after they spend that money. And so then you get this free rider problem where you spend money getting this community lower risk, and somebody else comes in and undercuts your premium, which we want people to undercut your premium, but there's
What's
no way
their
to
perspective?
bond them uh, to be able to make anything back on that investment. So it becomes a philanthropic thing instead of a profit maximizing venture.
Yeah, that's helpful. Okay. A question has come in. We have 5 minutes left. So depending how long you answer, this might be the last one or there'll be one more. Um, So, given the recent release of the FEMA review report, other conversations coming out of Washington, it seems that the federal government is seeking to shift more responsibility for catastrophe damage to the states. This questioner is also noting that homes make up a very large share of any hurricane damage that occurs, and is asking about FEMA support for pre-disaster mitigation. That was not addressed in the recent report at all. But Alabama, like you said, isn't relying on FEMA dollars to do all this good mitigation. So is there maybe lessons here? I'm going to kind of add on a question here at the end. Is there lessons here from what Alabama's done to maybe extend to other states, and to kind of get more support for these state mitigation programs? Do you spend a lot of
Um,
time kind of talking to other states, telling them what you guys have done?
yeah, so yes, we absolutely we do that enough that sometimes the legislature wonders why we're not spending more time in Alabama. That hey, aren't you working for us? And we say, well, this is part of it. We hope the so federal money, and first I would say that we are happy to spend federal money on loss mitigation. We ran into a bit of red tape on that in 2012, 2013. Uh, I know that Florida has spent a lot of money from that same source and been able to make it work for them. So it's not that FEMA is just inherently bad. It was just it didn't work for us in that situation. Now we've just heard from NOAA that some of the block grants that were out before are now being reconsidered, and we've already got a proposal in to work on the building code support grants to help municipalities determine what their best building code is and to study the best ways to um, efficiently enforce building codes. So we think that spigot is going to open back up. We're excited about using some federal money to. Um, we'd rather it be all federal money, but the most important thing was to get some of it done, and so we had to be a little bit creative, and it's one thing that you can do is to uh, essentially increase the tax on insurance companies to do it.
Yeah. Um, we have like a minute left. Do you have any closing remarks you want to share? Any final things you didn't get asked that you wish you had?
Um, Well, I'm a recovering professor. I could you can ask me questions about myself all day, and I won't ever leave. But
Okay.
no,
So we have to
this
cut
has
you
been
off.
fantastic. Yeah, you're going to have to cut off my mic before I'll stop talking. No, this has been fantastic, Carolyn. I really appreciate the opportunity to come and get all this interaction from your audience, and it's a very large audience. This has been fantastic. I really
Yeah,
appreciate
thank you
the
so much for joining
invitation.
us. And I'm sorry, there are some questions we didn't get to. We'll share those with Lars as well. I'm sorry we didn't have time for everything. Thank you for joining us, Lars. Thank you to our audience. We will be emailing all attendees a link to your papers if they want to follow up in more detail. We'll also be sending everyone who registered the link to the video for folks who weren't able to attend for one reason or another. And then I just want to close out by saying I hope folks will join us for our next two webinars that we have this summer. Next month in June, we have our next Ask Me Anything webinar, which will be with Victor Joseph, who's the President and Chief Operating Officer at
Oh, wow.
Mercury, and will be around insurance and wildfire issues. And then our next webinar in this Research to Practice series will be Professor Dan Schwartz on July 14th to talk about improving disaster insurance access and experience. So with that, let me just thank you so much again for joining us. It's always such a pleasure. I'm glad you were here.
Pleasure was all mine.